moving average, the MA, identifying support and resistance, it can serve as a support and resistance line for pricing reference. By means of pricing reference, which means to say, I would say that resistance line is for an area for you to actually either take profit or what? You need to do a reassessment. Let's say, for example, you suspect the stock is actually resuming its uptrend. It's going to continue on its uptrend. You need to see whether does it have the potential to continue further or not. All right. And this one, we have already spoken about it prior to this on my last class with the chart patterns in relation to the US market series. It's actually touching on MCD and MCDX. So it's basically double MCD indicators that give you a greater clarity in the sense that whether the potential or the probability of it breaking out, it's there or not. Okay, whether is it there or not. Okay, so this is one thing per se. Sometimes you have fake breakouts, so it's like the double MCD will be able to help you to tell by recognizing chart patterns at the first place. So that's knowledge, and then your skills comes later when you actually begin to do the assessment on several matters on whether you want to invest or you don't want to invest. Okay, so give an example like this one. That's how you use a resistance, but support more often than not is actually a retracement. Okay, I see it as a form of retracement. Doesn't mean go support, I go and collect lah. But if you want to collect, also you must identify at what stage you are actually collecting as support. If let's say, for example, the stock is actually sliding down like nobody's business, you think that's a support, you look at the support only, you think that's the support, and then the next thing continues sliding down. Say, no, that's supposed to be stronger support. How can it just slide down? That one, you have all the question, which means to say you do not have enough information in hand. That's the reason why the thought process actually failed in that process. Okay, and when that happens, don't beat yourself down to it. You need to actually improvise it to prevent that from happening again. How? Then you need to start looking at areas where you say what is the extreme oversold area, so far and so forth, pairing it with other indicators in that process. Okay. At the time the moving average goes sideways or upward after falling down, and then the stock price goes higher than the moving average, that generates a buy signal. So it's like basically when the price actually goes up, this is buy signals. This is buy signal. Okay, this is the buy signal. All right, and then after the stock price goes lower than the uptrend moving average. Okay, so basically when it goes lower, so it's like telling you when it goes lower, you break the support, then you buy. But the thing over here is that it's a signal generated, but it does not constitute a buy. If you were to ask me, okay, it does not necessarily constitute. But remember what I told you is that when you think you've already broke the support, I think I'm getting it cheap. But you got to see at what stage that you're actually collecting it. Also, all right, the stock price being over the uptrend moving average falls towards the moving average and then begin to rise without recording the figures below the moving average. So basically, what it means is actually charting a higher low. This is patterns also. Okay, when it's charting a higher low like this, you can see this is a higher low as well. Okay, in that process, probably you collected, then it went up, but it just couldn't break the previous all-time high over here. Okay, now this is what I emphasize just now. The stock price becomes far over the uptrend moving average. There are so many examples over the above 8 signals. You must be careful about the wrong signals. When you solely depend upon these signals, the wrong signal means the signal of buying and selling with no actual return. Because what it means by this, there's too much noises. So when you get in and out, then you get very frustrated in the process because you do not see the results or the yield that you intend to see. So I'll give you an example. Let's run through an exercise together. Okay, let's run through an exercise together. So let's say, for example, this is the fastest moving average. Let's say, for example, this is the fastest moving average. Suddenly, the price go all the way up high, so much. Let me ask you one question. Do you expect it to retrace or not? Yes or no? Okay, I ask the question one more time. Let's say the price starts from here. Okay, went all the way up so fast and so high away from your fast moving average. Do you expect a retracement? Yes or no? Okay, now you see everyone say yes. Everyone say yes. I'm gonna get one more yes from all of you. I'm gonna get one more yes from all of you. And then the next thing you'll be saying, yes, price move up and down and zigzag. Okay, Baru, correct, betul, very right. Okay. Mr. Lee says hit overbought. Okay, that's besides the story. Overbought uses stochastics or otherwise, what do you call momentum indicators. Now, the next thing is ask yourself one question. Everyone say yes, but you know the next thing you tell yourself, I should have sold it over there. How many of you actually say that to yourself, that I buy back at support? Type the word yes inside the chat group. I should have sold it over there. And forget to buy back. So, the thing over here is that it's about managing your expectation. Okay, you see, everyone answered yes at the beginning. Everyone answered yes at the beginning. And then after that, the next thing you will be like, I should have sold it then. Now, my question over here is that if you have an expectation and you know that it has not reached the peak yet, so my next question over here is that you should be healthy. You should be happy instead when the retracement happens because it is healthy. Okay, so long as the retracement doesn't break a certain value of support, then you know that the uptrend will resume. All right, so it's about managing expectation. It's not about the process of getting frustrated. So it's like, let's say, for example, you think this is the high point, but the thing continue to go, the thing retrace a bit, never reach the support, you sell already, never reach the support, then the thing went higher very quick. The time you go and hunt your kepala on the wall, and then you're gonna have fun with it. Okay, Gomez asked me, long term can ignore small fluctuation can? Yes. Okay, which I will be talking about this shortly, Gomez. All right, long term can ignore small fluctuation. Can? Yes, you can. See, basically, fast moving average doesn't work for you. But like I said, but when you see fast moving average, the price moving so far away from the fast moving average, right? Then you know that, it's gonna retrace lah. The thing doesn't go up forever. Okay, so basically, what I'm trying to say over here is that your guess is as good as my guess. Let's say it reaches over here. Okay, let me erase this so that I can draw it more clearer for everyone, all of you, in order to explain. Short term should sell lah. Yeah, lor, Theo, you say should sell lor. But let's say, for example, your script, you will say that retrace. I think it retraced back to support lah. But I thought that Joker never retraced back to support. Then suddenly retrace, decided to go up further some more. The time I said lor, you hantuk kepala on your wall lor. How? Sell or don't sell? Remember, the bottom line is always back to your question earlier. Okay? The bottom line is back to your question earlier. Are you all doing it for investing purposes or are you doing it for day-to-day living purposes? Let's just be clear on that. Yeah, don't be greedy. When the thing go all higher, the time you go to chase. You telling me when a Langloi running in front of you, Langloi means pretty girl lah, okay? For those that I'm using some Cantonese over here lah. It says like Langloi running in front of you, asking me, come and chase me, come and chase me. You won't chase ah. Theo, you won't chase ah. It's like it's like the price get higher and higher, and that sentiment is the behavior of how it affects you psychologically. Eventually, it's like, you know what? I just go in, and then the next thing you know, when you go in, you end up buying a penthouse. Really? Seriously. So it's like basically managing your expectation is very important when you come to investing. You run away. You say any lah, you run away. You tell me you never chased before. Theo, you tell me you never chased before. Impossible, you never chased before. Okay. I know some of you might find my jokes a bit lame lah, but I trying to make things so that more interesting so that people can remember it better. I hope it helps lah. Okay, and don't take it with offense lah. Please, everyone, please don't take it with offense. It's not only Langloi lah. Even ladies also see Lang Zai also, they'll be like chasing after the Lang Zai. Okay. All right. So then after that, moving forward. Okay, does everyone understand so far now what I'm trying to clarify over here? Okay, what I'm trying to clarify over here. It is a battle of it's a psychological battle constantly all the time. But let me tell you one thing: if you can manage your expectation in the process, right, You'll be surprised how easy is it to manage a portfolio. And expectation comes in a lot of manner, how you can actually manage it. So that's why I said certain things like, give an example, like knowing how to actually find the minimum target price, using the very conventional chart pattern method. Then you manage expectation. You said, actually, from this accumulation period, 1-to-1, the price actually possibly can hit here. That's the minimum target. So by the time it hit here and you went beyond, right, that becomes your trailing stop in the process. So I'll give you an example. Let's say, for example, I think everyone very familiar with this saucer bottom. Okay, price is here, it went down. Then after that, this is accumulation period. Okay, just a quick sidetrack from the moving average. All right, and then after that, over here, the breakout happened. Okay, when the breakout happened, give an example. Let's say, for example, this is the ratio of 1, the price range. And when you draw upwards, when the price break out from here, this will be your minimum target. Pair with other indicators. Don't talk about chart pattern only. Okay, 1-to-1 ratio. Okay, this is your minimum target price. So let's say, for example, this is your minimum target price, and over here there's no prior resistance or whatever it is. Then this will be your new all-time high. ATH. Sorry, my writing not so nice. Ugly. Bear with me on this. So when it reaches over here, okay, when it reaches over here, then you notice that, hey, target met. So as the price goes up and down, up and down, up and down, you know your target is here. So long as it doesn't break certain moving average, which is your level of compromise. It's like, let's say, for example, you use Homely Rainbow. So long as it doesn't cross the last yellow line, I'm okay to hold all the way until the minimum target price. But let's say, for example, it go all the way up and then the price closes below the last yellow line per se. I think a lot of teachers emphasize on that. Okay, so I'm just going to use that as an example. All right. Again, I said there's no ideal method. Some uses green line, some uses yellow line. So up to you. No right, no wrong. Okay. But having said that, let's say, for example, if it doesn't break, continue to hold on. By the time you reach the target, okay, my trailing stop. This is my minimum target met. Then anything continue going up, probably you use the same method. Either you use the green line or you use the yellow line, up to you. And the moment the price closes below, close your position. As simple as that. You see, the script, I make it sound very, very simple. But you see, it is like a roadmap that on your investing, right? You know what happened here. You know what will happen next. And then you have an idea that each time when you see fire, you know how to fight the fire. And you know how to manage, this fire, very small one. Let it burn first. When it burn bigger, then I deal with it. All right? Understand? So, Homely Rainbow yellow line. I talk about that later. Humor is the best medicine. Medicine is not the best medicine when you lose money. All right. So, does everyone understand so far what I'm trying to present to all of you over here? If you understand, type the word understand inside the chat group. Okay. Actually, I enjoy teaching. I enjoy teaching here because I got the free hand on putting my jokes out, and so far, thank God, no one complained about my jokes being offensive. So I hope no one takes it in an offensive manner. And if I do, please, I do apologize beforehand. Okay. Okay, so everyone understand? Can I continue or not? If I can continue, type the word continue inside the chat group. Only one person type continue. Yip type continue. Anyone else? Where are the traders? I don't see the traders around also. Okay, so moving average. You see, as the topic can be very dry, it's just some way we have to illustrate it to make it interesting so that you say, I remember Wong last time said, right, the moment the price actually go the way up very, very high, right, it 100% you'll retrace. So it's like, wait for it to retrace, see at what level it retraces to. I'm anticipating to be here. You can play the guessing game. That's where you begin to train your cognitive skills. Now, give you an example, okay? You begin to train your cognitive skills. Let's say, for example, you see it over here. The price came here. You know it will retrace. So now the next thing is you want to train your cognitive skills. You said, my retracement value, I think, based on the historical price data or the chip distribution on the Homely chart, all right, you can actually begin to check. I think it will retrace to this level. I think it will retrace to this level. But the lowest possibility is this level over here. So let's see how accurate you are in terms of your cognitive skills. How good it is. You guys, each one of you in this room right now should actually train yourself like that. Then you realize, hey, it's wrong. Why is it wrong? Why is it wrong? Is this something that I missed? That is when you begin to actually diagnose what went wrong, and then you refine the process of identifying what is so-called the support and what is so-called the resistance. It's like, let's say, for example, if you use the Hormel rainbow, more often than not, you notice, the stocks, I tell you, when it retraces, right, it touches the green line, right? Green line is not low enough. The lowest it can go, right, is probably the third yellow line. Then I can start collecting again in that process. All right. But more often than not, let's say, for example, if it falls down to the third red line, I think that's the support, right? The chances of it being the real support is very unlikely, very low. So, like I said, there's no 100% out of it, but you know the probability is very, very low. And you roughly have an idea over here. All right. So that's why I said it's very important that you have the skills of the knowledge. You must have the knowledge, followed by the skills in order to apply the knowledge. Then good cognition skills will refer to good decision making in the process. Okay. So moving forward. So same thing when going down also, the price goes zigzag, downwards. And then after that, I'm not going to explain it over here. It's the same thing. So let's say, for example, one person is trading on the downtrend. They use the stochastic or otherwise the momentum indicator. They realize that, I use this moving average, pretty much ideal. A lot of it actually doesn't cheat. The price actually goes up, then it comes back down. It goes up, then it comes back down. And more often than not, does anyone remember what's the moving average that I use when the stock is on the downtrend if I actually want to find a rebound? Does anyone remember the number? Anyone? Does anyone remember or not? Type the number out inside the chat group. Or you want to kasih tembak, you tembak lah. All the tips sudah bagi tapi tak ada orang ingat. Not MA50 lah. Danny says 12 and 26. No, not 20 either. No, not 13. 13 is too short already. Let me ask you all one question lah. Have you ever seen a rebound stock go for more than 30 days? Have you all seen a stock rebound for more than 30 days? Got or don't have? Got or don't have? Yes or no? More than 30 days. Rebound for more than 30 days. On the downtrend, it rebound for more than 30 days on average. Got or don't have? So what do you think the number is based on the Fibonacci number?